Let's start on the positive, shall we? Let's start with the market this morning. We are coming off a very big rally, and everybody wants to know if it can go much higher. There you can see the state of play this morning. Lou Basney's with me for this morning. Profits up 27% in the quarter, record highs across the board, AI doing well. So tell me, does this rally continue in the immediate future?
Let the good times roll. I feel like we've been answering this question for the better part of the last 12 to 18 months of, can it go higher? Can it go higher? Here, you put your finger on it in the intro. It's all about earnings. It's always about earnings. The oil down, stocks are up narrative is misleading. It's all about the fact that earnings growth not only is up, it's accelerating. I mean, 27% growth. That's not just Mag 7 driving that. That's the other 493. Yeah. They're accelerating as well.
And if you listen to the call, quite frequently, they're calling for even better profits in the future.
Yes, the back half of the year, it only accelerates from here. So again, not saying that means it's guaranteed. Nothing in investing is guaranteed. But if we don't have some other shock to the system, the trajectory for this market is much higher. I don't think we peak in May, June, or July. It keeps going higher into the year end.
Well, that's a nice forecast. However, all things could be upset if the things turn sour in the Gulf.
Absolutely, because the longer, it's always about duration here, right? The longer this lasts, the more recessionary pressures you get from higher oil prices, higher gas prices. That becomes a concern. I've always said, mark down May 31st. The end of May is the time where we have to have the Strait of Hormuz reopened, because that provides enough time for gas prices to come down before we start worrying about a recession. And more importantly, for the politicians, it's for the midterms. You need gas back into the mid-threes.
Well, you've got 3 weeks till May 31st, roughly speaking.
I think we get there by then.
All right, stay with me for the hour, please. I need help. Thank you very much.
And I like AMD. Always buy it on a pullback if you can. You know, the last time we talked about it was April of 24 when it was trading $150, and it was a stock I liked on the show. I like it again.
At 416, he likes it again. Okay. DR, we'll take that. Thanks very much indeed. Lou Basney's with me. This AMD is one of your stock picks.
It is. And DR and I used to be former colleagues, so I love that we still think alike. He got to it early in April 24. I mentioned it on the show in about June of July. And back then, you remember, NVIDIA was priced for perfection, but I said AMD was priced to catch up because everyone was saying that AMD would never replace NVIDIA. But here's what we've learned. $1 trillion plus in spending on chips. Companies need more than one supplier. And this pie keeps getting bigger and bigger. DR was alluding to it. Over $1 trillion are going to be spent in the next year on chips. AMD doesn't even need to gain any market share. They're going to keep growing earnings. Stock's up 320% in the last year. I don't even think you wait for a dip, because if you look, where have the dips been in semiconductors? You just got to buy now.
Just buy it now.
Buy now if you're a long-term investor, and put it in your portfolio. If you did that even with the semiconductor ETF, it's the best performer for the last 10 years.
Okay, you've got one more stock pick.
Yes.
I need it now.
MACOM,
what is it? MACOM Technology Solutions. What do they do?
Look, they make chips that move data faster. So if you look at the AI profit waves, it's come in waves. First it was chips, then it was the guys that could build data centers that had power. Next it was the memory chips. Now it's moving to optical components where you can move data faster throughout the whole infrastructure of the data center. This is a company that's been around for over 70 years. A lot of applications in defense, so they have protection there. But they just reported earnings this morning, up 15% on raising guidance. I think this stock, we talked about at the end of 2024, was about $150 a share. I think this goes to 400 plus, no problem.
400 plus, no problem.
No problem. You heard it here first.
And AMD, you buy it now at 416, and it goes to 500?
I can't predict. If another 320% for here, you'd have to know when the AI trend's going to end. I think these are long-term holdings that could easily, it sounds crazy, it's already doubled this year with AMD. It could double again from here. And this is what the thing, people get caught up in, I missed it, it moved too fast. But look at a company like SanDisk. I mean, we were talking about it yesterday on Big Money Show. It's straight up. I mean, these things go a lot higher and farther than most people anticipate. You got to be in it to win it, kind of like the lottery. This is less risky than the lottery, in my opinion.
It's tough on Lauren and I. You know, we sit here, get all these recommendations, all this excellent news.
I said on the air yesterday,
out of it all.
It went up 4,500% in 1 year.
You can't get mad about every stock you miss because there's 4,000 of them out there. You're always going to be missing something.
Yeah, I can get mad about this. All right, the opening bell has rung.
Shares of Shake Shack are down 27%. It was a revenue miss, even though it was up 14% year over year. There's higher beef costs. There's bad weather. There's rising costs for paper goods. There's rising costs for food. All of those are saying that it's hitting the shares in the short term. Still, a lot of analysts are bullish on this company. They're highlighting Project Catalyst. What they say is sort of like an AI overhaul, a new point of sale system, a new loyalty program where I think analysts on the street think long term that will pay off, but the market today is looking at the short term factors.
A loyalty program.
Yeah, that screams not much growth ahead. You're trying to squeeze efficiency out of your existing business. I think a lot of these food stocks suffer from the same problem, right? How you get Chipotle bowl fatigue, you're getting Shake Shack burger fatigue. People want something new, and trying to squeeze more out of that customer base becomes harder and harder for Wall Street.
Let's go back to pizza. Snapchat's advertising revenue down. Why are they blaming the Iran war?
Yeah, so this is interesting. Okay, so they are saying that, look, there's some tough advertising environments, right? When there's a global economic crisis and a global war, advertisers pull back. I think what's interesting is Snap still, the shares are only down 3%. I think the numbers underneath the surface looked pretty good, but feel free to disagree with me. 12% revenue increase. They returned to global user growth. Yes, there's cautious guidance. Yes, there was an end to their partnership with Perplexity, but they said 70% of their ad spend now utilizes AI-powered automated solutions.
So I'll disagree a tiny bit, right?
Okay.
Growth is back, but that's never been the issue. The moat has been the issue. They have no patent protection. So Snap becomes a de facto testing lab for Meta and Facebook because anything Snap figures out and discovers works, Meta steals it because there's no repercussions and applies it to a much bigger network. So this is a company that has no patents to protect them. It's always plagued them. They're not going to win this social media world.
Well, that's fascinating.
Yeah.
Didn't know that. Thank you. Salesforce, Microsoft, Disney, IBM, Visa. Lou, that's pretty much across the board. All different industries.
All across the board. Disney's the one that's interesting because they reported they're kind of mid-cycle in the parks. Attendance is down, but spending's up at the parks. But they are showing profits in their streaming division. So I look at the underlaying here, and it's a lot of tech. Visa, transactions, that's a vote on the consumer. IBM is tech. Microsoft, your beloved Microsoft. When are we getting to 500 per share? That's what I want to know.
So do I. Beloved, that's an extreme word to use. Let's have a look at the S&P 500 winners, please. Datadog, Fortinet, Albemarle Corporation, Par Tech Corporation, Palo Alto Networks. That's cybersecurity there, Palo Alto.
Yeah, Palo Alto, Fortinet, you get some cybersecurity. Albemarle, you're getting into the natural resources, lithium. Not sure aware of Par Tech, Datadog, but again, you're seeing tech dominating, which makes sense in this market when 38 to 40% of the market, S&P 500, is really comprised of tech.
I'm not sure about all these companies, but I don't see any manufacturers there.
No, manufacturing, look, I think...
Not doing much.
No, I think you're going to look at optimization in the manufacturing space, or those companies that are empowering that. I mean, there's a big push. The president's right. He's re-energizing manufacturing in the United States, but it's never going to be a 20% plus contributor to our economy. It's resurging.
Not now.
Not taking over.
1950, yes. Not now.
Exactly.
All right, move on to the NASDAQ winners. You get to see your stocks. Datadog, Fortinet, Zscaler, Palo Alto Networks, CrowdStrike Holdings. Pretty much the same as the S&P leaders.
All from 2 down are cybersecurity stocks. So I would argue in this day and age, right, we're fighting a physical war in Iran, but the next war front is always going to be on the digital front. And unlike land that doesn't expand, the amount of data we produce and consume is ever expanding, so you have to have great protection.
And look at all these stocks that we're quoting on a daily basis that are up 5, 6, 7, 10%, 14%. That's extraordinary.
Listen, I think
you don't see this very often.
No, I think the takeaway is don't worry about picking the right stocks. Just make sure you're putting money to work in the market in your 401k any way you can, because the trend is moving up and to the right for the foreseeable future.
Historically, markets don't hit their yearly high in June. What about this year?
I don't think so either. That whole adage, the sell in May and go away, just doesn't hold much water and weight, especially in the recent bull market. So I think we're getting into a stage where you're seeing this trend persist of AI spending. I don't think you need to worry about missing out and trying to time the market. I think it's more important that time in the market and making sure you're making investments throughout the year.
So I should not sell my beloved Microsoft.
I asked you one time if you would ever sell it, and you said never. And I said, that's the right answer. I just don't think there's any reason. Why would I ever sell Apple? Is the same question. Why would you ever sell Microsoft?
Yeah, I just don't want to pay the capital gains tax. Okay, here we go.